everybody realized that, yes, why would we say no to money? Because then the companies are going to another country and they are paying other countries' taxes. Let's bring the foreign capital in. But there's a different thing what the regulators want and a different thing what the private sector's risk appetite is made for.
All right. So Cyprus, just as Malta, as I said to Joe, often get contrasting regulations even in the fintech world, not just the iGaming world. So, what's the real story on regulatory momentum in these two jurisdictions as we head to 2026?
If you're a small island, it's basically a double-edged sword. You can be very flexible because the Aperel is not that big. You don't have to negotiate over years and years just to get something through. But it comes with the caveats that you're hungry for business. So you have all of those loud voices who are making the decisions that, guys, we need to get the money in the country. We don't have agriculture. We don't have industry. The only thing we can do is allow a bit of flexible regulation so the foreign capital comes here and hire our talents and paying our taxes. But this is not only in Europe, in Malta or Cyprus. We can see that everywhere. Caribbean, for example, or smaller, other these banana republics. This is a very classic story. But I think that Cyprus and Malta is trying to be yet at the forefront of the innovation, but still having very strong regulatory background because they want to prove themselves to the EU that, yes, guys, we are small, we want business, but we still want to play according to the rules. So Cyprus and Malta, I would say that one of the strictest KYC and AML check for anyone who would like to open a bank account or would like to start a new fintech relationship. Why? Because these countries are really under scrutiny after what happened with the banking mishap in both of those islands. So now the attention is really much on them. So they really want to prove themselves. So it is good because you can get to the decision makers. And as Joe said, that there is one regulator to deal with, not 5 different regulators that you have to submit the different information. But there's much more scrutiny. And we have heard some horror stories about this previously.
All right. So a similar sized country to Cyprus is Estonia. And Estonia was once a trailblazer when it comes to VASP licensing. But has been taken more conservative stance recently. So, Anna Agu, what is the latest update from Estonia's regulators on crypto and fintech compliance frameworks?
Yes, I think that this conservative approach was always there. The question was like, we our country, which is always innovative, we are standing for the technologies, but on the other side, we are trying to protect the consumers. We are standing for the reputation of the country and trying to find the balance. The situation that was in Estonia in terms of the crypto regulation, let's say in 2017, 2018, we were the first country in the EU who started to regulate this market. And of course, we made our mistakes. And one of the mistakes was that the regulatory requirements were too low. And once the country announced the opportunity to authorize the services in this field, there were a lot of companies who were interested in this without maybe the good idea behind the business.